So today we're going to be talking about learning how to build your own profitable strategies. Now, I'll qualify this because there are different types of strategies and different ways you would build these strategies, depending if you're a swing trader, whether you're a day trader, whether you're a short-term trader, or whether you're an investor, or whether you're looking to manage your risk out of your 401k. However you want to be, you have to build strategies to fit that type of environment and that type of risk. So today we're going to be looking at building trading strategies for trading, for short-term swing trading, medium-term trading, and for trading CFDs or even Bitcoin. Now, there are probably as many trading strategies as there are traders, but not all trading strategies and trading plans are created equal. I suggest that you find some strategies and then build a trading plan around them. There are a plethora of trading strategies available to you, but I also encourage you to create your own trading strategy. When you build and test your own strategy, you are the master and you understand all the ins and outs. You are not just trying to duplicate someone else's thoughts. You know, there's a lot of gurus out there that are pushing their trading strategy, their idea, their formula. But the fact is, none of them ever give you every in and out of their formula. They'd either like you to trade with them, or they'd like you to sign up for their school, or they would like you to deposit money with them, but they never give you the full in-depth understanding of their entire strategy. I even know brokers that have just what they call black box strategies, where it's all written inside of a computer. There's robotic trading, there's all kinds of things. But whatever you want to do, you can start out from somewhere. You don't have to start from scratch, and then modify it, adjust it, and learn that strategy inside and out. And you can add your own twist so it becomes yours. Now, this is a frightful thing, it's a time consuming part, but it can also be fun. Now, myself as an investor and trader, I don't get my satisfaction out of trading. Okay. I get my satisfaction out of building my strategy and seeing that it reaps rewards and results. I mean, it's like saying, you know, you're a football player, you're a pro basketball player. Do you just get the high from winning Saturday's game, Sunday's game? Or you get the high out of winning the catch? Okay. Or, you know, catching the football? Or do you get the high because you spent all week long learning plays? You spent all week long learning your opponent. You spent all week long learning the weakness of the guy who's up against you, so that you knew exactly when you could dip and dab and get around him and get yourself open. Because the end result was, yes, you scored a point, or you scored a touchdown, you scored a field goal. But that was the result of hours and hours and hours of practice. And that's why the reward is so great. So no matter what time frame I am viewing on a chart, I look for moves where there was money to be made. Okay, so this is how you start. Okay, for instance, Bitcoin sailed to 62,000 today. It had been hanging around 58, 59. What could I have seen on my chart today that would have helped me decide that Bitcoin was offering me a buy opportunity? It's all over. It's all past now. Okay, we're looking back and saying, what? Okay, how could I have seen that in my charts? What indicators, what oscillators, what patterns, what happened on the chart that I didn't see, or that's not part of my plan, that I could have seen that would have given me a positive trading result? Then I backtrack how I could have gotten there, and I build that into a strategy, and then I test it. So in short, you want to analyze your charts, looking for opportunities. Examine those opportunities and construct how you turn those opportunities into real money without exposing yourself to excessive risk. Now, that's the other thing. Lots of strategies will give you a trade, but you have to always calculate in your risk. Now, me, if I get in 6 or 7 trades a week, that's a lot because I don't risk much. I have my minimal risk. My target prices, my limits, my stop losses all have to fit very tight parameters. But you might be looking for a little bit more high risk, but that's part of your strategy. Okay. Because part of your strategy is when I do this, this, and this, and see that, that, and that, and you filter it all down, and it tells you you have a buy opportunity. How do I set my target point? How do I set my stop loss? How do I decide how much potential profit is going to be, and how much potential risk is going to be? If the profit doesn't surely outweigh the risk, then that's not a good trade, and it's probably not a good strategy. Now, after that, you want to test your strategy. The reason we have demo accounts, and yes, I know all you newbies out there saying demos, that's what they give us free so we can play on. I've been trading since the 1970s, and I actually spend more time on a demo account than I do in my real account, because the demo account is where I build my plans. It's where I test it's where I adjust my strategies. It's where I can mess around without risking any money. And then when the tweaks that I've added to my strategy show positive results, I then, and only then, consider moving it over to one of my live trading strategies. Now, please don't misunderstand me. You don't have one strategy. You have many. What you have is a trading plan, and within your trading plan is your strategy. Your trading plan, it covers everything from what times a day I'm willing to trade, how much the maximum I'm willing to trade, how many trades I'm willing to make a week, how long do I stop everything and modify it and go back and back test it. Okay, how much would I have open into the market in multiple trades at any given time? This is part of your trading plan. Your trading plan is your Bible. And then in that Bible are your different strategies. So you might have one strategy for gold and a completely different strategy for the euro US dollar. Or you might have one strategy for the first part of the month where there's tons of economic data hitting the fans, and different strategies for the middle of the month where the markets are a little bit slower. You might have completely different strategies for trading high tech stocks versus value stocks because they move differently. So what you want to do is when you develop your trading strategy, you will start with a set of recommendations from analysts or other traders. Try these in your demo account and modify them to see what happens. It's important to create your own formula for success. Now, I'm not talking about taking RSI, stochastics, and MACD and saying, I have a trading strategy and I'm going to adjust my MACD from a 9 smoothing and moving average to a 14 because I feel that that'll work. No, that's not a trading strategy. Okay. You start out saying, okay, I'm going to look at my charts. I see a potential for making profit, or that profit was made today. Okay. I see that it was above the 50 time frame moving average. It was also right at the resistance level. I saw also that my 100 period moving average was fanning out in the other direction. I saw volume was increasing. I saw maybe you saw a triangle in your pattern. You saw a bullish or bearish engulfing candle, whatever it was. Indicators and oscillators are your last ditch. Indicators and oscillators are just what they are. Indicators indicate. They're your translators when you can't figure out what price action in the market is trying to tell you. Now, remember, you can always learn from trading analysts. People like me and other analysts out there, we're not idiots, and we're not trying to sucker you into anything. So learn from me. Learn from experienced traders. Go on social media, talk to all these other traders. Go on TradingView and talk to all of these, see their charts. But understand, they're not all right. They're not all experts. Some people are just talking off the top of their heads. Other people aren't risking any money or trading any money, but they're not imbeciles. And they're not con men. So start with what you see on their charts. Start with their thing, and then start modifying it and testing it. Because the other thing is, I have my indecision strategy, okay, which I teach all the time. Now, it's taken me probably 10 years to define it. And it's very specific. But in my 1 hour class with you, there's no way that I'm going to get all the little innuendo out of my mind and into your head. because there's some things that I don't even think about because they just become second nature. It's not because I don't want to share them with you, but sometimes you need to feel the chart. Remember, think back. Different countries are slightly differently, but think back when you got your driver's license. Now, I'm from the States. When you're 16, you can get your learner's permit. Now, when I was 16, the year before, you could take driver's education in school. Okay, and you go in the classroom after period, and somebody would lecture you on all the rules of the road. And for 2 or 3 months, once or twice a week, you go to these lectures, you take an exam, and they would say, okay, you've passed the written part of your exam. Now you need to take the driving test. But in order to pass the driving test, you have to have so many hours of on-road experience or training. Well, I had a very good father. And my father would spend every weekend, evening, and afternoon taking me out and letting me drive all the time. He yelled a lot, okay, but I didn't wreck any cars. But we got there. I went and took my exam and passed, first time through. Because we were on a little planned area where they gave the exam, you knew exactly what to do. Plus, you went around the block one time in a quiet neighborhood and you went and rented it. Well, it was a world of difference when my father handed me those keys and I wanted to go to my friend's house, but I had to get on the highway and off the highway all by my lonesome. Well, today, I don't even think twice about it. But nobody could have taught me that. Nobody could have taught me merging into lanes. Nobody could have taught me how to anticipate. Nobody could teach me how to deal with rush hour traffic in LA. Nobody could teach me shortcuts. Nobody could teach me reading the traffic. This is what I had to learn on my own. And it took a lot of time. A lot of time. Now, I'll remember after I got my license, and I have been working since I was 13 years old. I said to my father, I want a car. He said, what do you want? I said, in that showroom by your office, they put this yellow Opel GT in the window. He said, you want that? I said, yeah. He said, you can make the payments? I said, you know what I make. He said, you can cover the insurance. I said, yes. He said, okay, we'll talk about it later. So a little later, my father calls me. And like I said, he was a really good father. Calls me on the phone, says, the car's yours, go pick it up and leave your little, whatever the ratty thing was they gave me when I turned 16 there. I was excited. I said, okay, I'll go right after school, but I have to be at work by 4 o'clock. And he said, no, it's all ready for you. I already signed all the papers and everything else. I was thrilled to death. Well, you know what? The one thing I didn't ever know, I learned to drive in an automatic. Even though they were only around for a year or two, I never drove a stick shift. And the car I just bought was a stick shift. So here's this guy, 16 years old, got his new car with a stick shift. The salesman's delivering it to him. And I'm saying, how do I drive this thing? The salesman says, look, I'll take you in the back lot and I'll teach you. So he takes me in the back lot and he shows me first, second, third, fourth, use the clutch, how to shift up, how to downshift, how to read the odometer. And we puttered around the parking lot. I can't tell you how many times I stalled. Well, I finally got the courage to drive at a dealership. I got on the street. That was a surface street. And I get it, it's in first gear, and we're going, and fortunately there was no lights at the moment. I got up to second gear, and I was okay. Now, I got to work, no problem. A little stressed out, but no problem. And I didn't work that far away. Now comes the end of the day of work, and I work from 4 to 11. I worked as a billing clerk in a trucking company. And 11 o'clock, I go to leave. It's late, it's nighttime, it's dark. And I live the opposite direction from where the car dealer was. Not far away, but the opposite. And the only way for me to get home, I was on a road called Rolling Road. I know the story's going on forever, but it's an up and down steep road. And what does it have? Stoplights at the top of the hills. Well, I have no idea how to get my little yellow thing up the hill. I'm coming down the hill and I'm in second gear and I get it. I actually get it to the top, but the light's red. So I push my foot on the brake. I let go of the clutch. I put the car in neutral and I'm alive. The light changes. I go to shift it and drive. But on a hill, you can't get into first. As I'm trying to rev the engine, get it into gear, the car's drifting backwards. Thank God there was nobody behind me. Well, I let it drift all the way down the hill till I can get it in gear, and then I jam on it and I fly up that hill and down the other side. Well, this was my night going home. But this is no different than where you start out your trading and your trading strategies, because you can only learn so much. So you have to decide what you want to accomplish. Do you want trading signals? Do you want entry points? In other words, you want to be able to get up the hills and get on the highway. And then what will you use for your visual observation? Traders will use trend lines, oscillators, visual identification to determine the type of market, the price action it's presenting, what strategies have in a flat market, a ranging market, a trending market. They're all bound to contrast strongly with each other. And it's not possible to identify a useful strategy without first filtering the tools of the basis of the market. Now, what's the difference between a trending market and a ranging market? It was me going to work on that flat surface, me coming home from work on that hilly surface. I needed two different strategies. So once this is done, the time frame of that trade is determined, and the second trade stage is, needless to say, ready. Now, time frame. Well, imagine if I had to go up and down those hills at 6 o'clock at night at rush hour. You know, a lot of difference. Time frames are the same. Volume's different. Markets are different. Safety nets are different. Risk management is different. Now, I teach a very simple strategy. I call it my triple header strategy. And in this strategy, we look at price on your charts. We look at the support and resistance levels. Now, I don't have time in this class to teach you all about support and resistance levels, but let's say support and resistance are the floors above your feet and the ceiling above your head in an elevator. When you want to move up, you have to break through that ceiling. And when you want to go, and that becomes your resistance. When you get on top of that ceiling, it's your support. Or let's think about it in my car example. That resistance was the top of the hill. Now, I drove that car to the top of the hill, but I got stuck there at the red light. Then I tried to get off going up, and I drifted back down. I got to a lower level. I was able to get my car in gear and slam it, and I went flying through that resistance level, only to ease back down on the other side. And think of trend lines as those straight lines you put on your chart that stay underpriced or overpriced, that tell you that price is moving in a specific direction. Because price is relatively random. But there are certain times that prices exhibits non-random behavior. And when we have this non-random behavior, we can then interpret price action. These times of non-random behavior are called trends. Now, a trend is simply a price is moving up or down, trending up or trending down. Okay. And you can have a trend that's well developed, making higher highs and higher lows, or lower lows and lower highs, or you can have price still moving up, but have no quality to that movement. Okay. We want only this type of a trend. We want a well-developed trend. So support and resistance is here and here. And support and resistance, these levels come from how price had behaved the last time it was in this area. And so we can extend that forward and see what we expect price to do. So as we see the well-developed trend line come down here to make a lower high and then start moving back up, we can estimate or project that price is going to move up at least to this level of resistance. The third piece of that strategy is volume. when you see other traders jumping in the market to do what you're doing, it's saying that that move has momentum, has support. Now, that wasn't that complicated, but it is, because you have to first decide your periods, whether you're looking at a 5-minute chart, a 15-minute chart, a half-hour chart. You have to decide your risk. You have to decide now your entry point or exit point, because what you've done now is you filter everything out and got yourself, oh, you got yourself a possible trade. Now, how am I going to make that trade? So as I said, then we have rules. So once the support level is identified, draw a horizontal line and wait for price to fall back to that support line. This is all in your strategy. It's up to you. When price falls back and touches the support line, wait for the candlestick to close and place a buy stop order 2 to 5 pips above the high of the candle that touches that support line. For buy limit or market orders, place your stops at 10 to 30 pips. Set your take profit level at the next resistance level. These are the rules or parts of your trading plan and your trading strategy. So here's how you would actually visualize it on a chart. So we see price moving up here. Nice, well-developed trend. All of a sudden it hits that resistance line, can't break it, starts to fall down. Okay. This is the point we would put our sell stop order. Stop order gets us out of the market. We would sell here when price couldn't break this resistance, and this is where we would protect ourselves. Okay. Same thing in the reverse scenario. So there's many different strategies that aren't very complex. You just have to write them down and test them and figure the innuendo out, because I just give you some highlights, but not one of them is a tradable strategy because I haven't explained enough to you to learn about it. So many traders consider price action of special relevance when identifying support and resistance. And one very compelling reason, the market has actually traded this asset at those specific prices in the past. And the more times that prices hit that particular level in the past, that resistance support level, the more it is reliable. So which elements of support and resistance work best? Well, it depends on your strategy. None of the aforementioned support and resistance levels have a predictive behavior. Each is simply a probability that we won't be able to determine until the trade is over. But these levels can help traders build their approach to work with the probabilities. Now, you need all types of different strategies to get in the market and get out of the market. You can have type 1 trade. A buy can be taken when the old bottom, or the sell can be taken near the old top. A buy or sell can be taken when a stock crosses former tops or crosses a series of bottoms. 3, a buy or sell is a secondary reaction after stock has crossed previous tops or bottoms. All of these are incorporated into your strategy. So now we can kind of have the beginnings of a trading strategy. We'll have to at least add one indicator, which will serve to give us the market details. So one of my favorites is Bollinger Bands, and my other favorite is MACD. But remember, many strategies don't last forever. They'll work well for a couple of weeks in a particular market, but they don't hold on forever. So that's why you're constantly testing them and tweaking them. So the bottom line is strategies fall in and out of favor over different time frames. Occasionally change will need to be made to accommodate the current market or our personal situation. Create your own strategy and use someone else's and test it on a time frame that suits your preference. By using what the past has shown us, we can give ourselves some great starting points to making more money and avoid losses as we become more experienced traders. Track all of your strategies in your trading journal so that you can constantly test their profitability and what conditions they work best in. And make sure you test them always on a demo account. So to learn more, join us at Just Learn Academy, and we'll get you on the right path. Thank you very much and have a great trading life. Bye now.